Hi everyone, welcome back to the channel. So the Federal Reserve just cut interest rates by another quarter percentage point. We're going to talk about what happened in the markets this past week, as well as what to expect in the week ahead. If you're new here, welcome and thanks for stopping by. My name is Nate. I'm an engineer and investor. Please subscribe for more content like this. Now let's get into the video. Here's a market summary for the week ending December 14th. I will include these notes in the description. So this week was really defined by two topics. One, the Federal Reserve cut interest rates by 25 basis points, or 0.25%. This is their third consecutive cut. The Dow Jones and the Russell 2000 hit all-time highs midweek, only to fall later in the week. The other side of this coin is there's fears of an AI bubble that are really growing, and that kind of came to a head a little bit on Friday, with Broadcom stock dropping about 11%, warning on margin pressures. Oracle also fell sharply, even though they beat estimates. They are carrying a high debt burden, and they really don't have the free cash flow to pay for this like some of the big tech names. There's also some merger talk with Netflix trying to buy Warner Brothers Discovery, and then Paramount launched a hostile takeover bid after that news broke. So we'll see who gets it there. There's also a rotation a little bit into small cap stocks, which have been beaten up, but the lower short-term interest rates is going to help, smaller companies. So some people rotating out of big tech and the AI trade and jumping into small caps. In the bond market, as mentioned, we cut interest rates by a quarter percentage point. Really, the Fed talked about how they're fighting their dual mandate with trying to reach maximum employment with a softening job market, and then trying to, keep inflation under control. So inflation's still running around 2.8%, which is higher than their 2% target. The Fed has also started buying $40 billion in treasury bills per month. And this is to shore up money market accounts and ensure adequate bank reserves. So despite this rate cut, longer-term treasury yields actually moved higher this week. We'll show that in a little bit. Some of the reasons may be the market pricing in higher long-term inflation, and then some bond investors are shifting to shorter-term bonds due to now an expectation of less rate cuts. The Fed's only expected to cut rates once next year, which is less than previously announced. Other interest rate news: mortgage rates were up from recent lows, but around 6.2% for a 30-year mortgage. Okay, so here's a quick look at what happened in the markets last week. So I'm going to scroll through all these indices I have on the left here. You'll see here I have this on the 1 week view, and you'll see that 1 week return up here on the right. So hopefully you can see that. So for example, this was the Dow Jones last week. So on Friday, it was down 0.5%. And this is shown here on the left. For the week, it was up 1.22%. So this is how I'm going to go through this. So that's the Dow. The NASDAQ was down 1.69% on Friday and 1.98% during the week. And you can see here the real drop-off was on Friday, and that was due to the AI stocks, as mentioned, taking a fall then. So for the week, the S&P actually did okay. It was only down negative 0.67%, and this was due to some rotation out of the tech and then into some other areas of the S&P. The RSP, this is equal weight ETF for the S&P, so it's interesting. So instead of being market cap weighted, with the largest companies at the top being a large portion of the S&P 500, this is equal weighted. So all 500 stocks have the equal weight, and you can see this index was actually up for the week about 0.92%. So which is healthy for the market. So. On that same token, here is a NASDAQ equal weighted fund. And this was down negative 1.39% for the week, which, was better than the NASDAQ itself did. This is the Mag 7, so the Magnificent 7 stocks. Say that 5 times fast. It's interesting to track. So that was down almost 2% for the week, 1.94. ARC Innovation Fund, Kathy Wood's one of her famous funds. This is innovation, a lot of tech, a lot of early on startup type companies, but this includes like Tesla usually. So this was down 2.65% for the week. The Russell 2000, this is a small cap index, as mentioned, has done okay recently. So this was up 0.56% for the week. VXUS, so this is a Vanguard total international stock market, and the XUS means it excludes the US. So with the dollar weakening recently, you can see it's done okay. Excuse me, it's up 0.24%. The VIX is a volatility index for the stock market, and this is good to track to see how much fear there is in the market. Usually above 20 is when the fear really starts. So we were down this week, down 2.36%, just under 16, so not too bad. Now looking at the bonds, the 13-week Treasury bills were down almost 3%. And you can see this is due to the Fed cutting rates on Wednesday. So that is the short-term end of the Treasuries. If we look at the 5-year yield, 5-year Treasuries, that was actually up 0.59%. So this is what I was talking about earlier, where longer-term bonds actually saw the interest rates go up due to the lower rate cuts next year. Here's the 10-year. So this was actually up 1.13% to almost 4.2%. And the 30-year bonds were up 1.3% to almost 4.86%. This is a Vanguard Total Bond Market Index Fund. So I like to look at this. It has all different maturities of treasuries. So for the week, this was down, 0.21%. So when interest rates go up, the value of those bonds will go down, of existing bonds. So that's what's happening here. The ICE B of A Move Index. So this is actually similar to the VIX for the stock market. This is basically the fear gauge of the bond market. And so that was up almost 3% this week. The dollar index. So you can see this is the US dollar index. Tracks the strength of the dollar, and the dollar did fall this week due to the Fed lowering those rates. So crude oil, this was down a little over 2% for the week. Just another thing that obviously affects the economy. Bitcoin was down almost 5% for the week. You'll see it's still moving now due to Bitcoin trades, I think, all the time, basically. So this is down 4.5%, looking this from today to the past week. Gold was up almost 3%. Usually with inflation fears and a falling dollar, gold has been a safe haven. And this, as a lot of you know, probably gold has done extremely well. Year to date, it's up almost 63%. And actually, I'll leave this on that for silver as well. Silver has done even better. Silver is up almost 110% year to date. So the past week, silver was up 5.6%. Here's a Vanguard small cap ETF I like to track. Breaks up some of the small caps, not the whole Russell 2000, but that was up 0.87%. Vanguard mid cap ETF was up 0.66% for the week. VNQ, which is a Vanguard real estate index fund, was down 0.26% for the week. Consumer discretionary was up 1.39% for the week. And these are all the sectors of the market I'll be going through here. Communication services was down 1.22%. Consumer staples was up 1.83%. So this is some of that rotation into other areas of the market doing well, where tech had a tougher week. Vanguard's energy index fund was down 0.34%. Financials were up 2.76% for the week. Healthcare was up 0.56%. Industrials were up 1.26%. And technology was down, as mentioned, tech was down 2.83% for the week. Materials were up 3.01% for the week. And utilities were down 0.36% for the week. So that's how you can see the different areas of the market, what did well, what didn't this past week. Now we're going to look at some specific stocks, just some of the bigger names that I like to follow. It gives you an idea of how these different companies are doing with this different, this changing market. So you can see here NVIDIA, that's been obviously on a tear. This was down 5.1% for the week. Apple has been pretty steady. It's down 0.3% for the week. Microsoft, this was down 1.81% for the week. Google, which has benefited from that AI trade recently, has fell almost 3% this week. Amazon, 1.55% in the negative this week. As mentioned, Broadcom, one of the sell-offs on Friday, was down almost 11%. And that was for the week as well. Meta, down 4.3% for the week. Tesla, one bright spot. This was up 2.8%. Berkshire Hathaway, usually pretty steady. In times like this was up 0.31%. And then Walmart was actually up 1.87%. And Oracle, another one that got hammered this week, was down 14.19% for the week. And closing off my list here is Netflix, which was down 2.99% for the week. So here's what to expect in the upcoming week in the markets. There's some key economic indicators on Monday. There's Empire State Manufacturing Index. This is for New York State, and it kind of sets the tone for manufacturing data. There's a housing market gauge in home builder confidence. On Tuesday, this is big, the delayed jobs report from November and October will be released. So this will be, this will basically tell how close the Fed was to what's going on in the job market and their recent interest rate cuts. Retail sales data will be released. This was also delayed from October because of the government shutdown. Industrial production, let's see, Wednesday, business inventories will be released, and then Fed speakers, they'll probably release some comments reacting to the jobs data on Tuesday. On Thursday, the CPI, Consumer Price Index, will be released, and this is delayed November data. Also be released will be weekly jobless claims and Philadelphia Fed Manufacturing Index. On Friday, we'll get existing home sales data, and this is from November. And then we'll see consumer sentiment, University of Michigan. So this tells you how American households are feeling about their finances and the economy. That's the market wrap for this week. Let me know if you'd like to see more content like this. Please like and subscribe, and thanks so much for watching. If you'd like to know how to turn $10,000 into $3.5 million, just click here.